the adoption of this new technology, which puts it in this stupid exponential secular trend, but with volatility. The volatility, the big volatile drawdowns are just driven by liquidity. So this year, we've already established is a liquidity positive year. In fact, a very big liquidity positive year because you need to roll all of this debt. So generally speaking, it should be a very good year for cryptocurrencies. However, we're in this period where the Federal Reserve and the Treasury, and because of the dollar, have tightened liquidity over the last couple of months. It's forward looking, so it's affecting cryptocurrencies right now. So they've been soggy for a while because liquidity was tightened a while ago. But again, our expectation is, it shouldn't last that long in price or time. And then we've got liquidity all the way through this cycle. Now, if we go back to 2021, the prior post-election cycle, because the pandemic had seen the global economy go down to zero, then go straight back up again, the business cycle peaked really early in April 2021. Normally in these presidential election cycle years, the business cycle peaks towards the end of the year. So Bitcoin had a very complicated 2021, but what we're doing now looks very similar to the 2017 post-election for Trump. And what we saw then was ongoing injections of liquidity. We started the year with a sharp 30% correction or 25% correction, the sort of thing we're getting now. And then liquidity just came all year. And it wasn't actually massively put in by the US. It was actually China last time. And I think we might see that again this time, where China is going to play an important role in global liquidity. So I think it's going to be a much stronger year than people expect. People have a lot of PTSD from 2021, where it peaked early, then collapsed, then went back up again, then collapsed. I think it's going to look more like we saw in 2013, 2017. So yes, I remain very bullish for this year on all risk assets.
So if I use similar numbers, let's just use round numbers. It's at 100,000. You see it pulling back 25% to 75, and then take off
Probably
again.
not even. I don't think it goes down 25% because there's ETFs and there's the market is more mature. So let's say let's say 90,000. So it goes from 100 and where did it get to? 110 down to 90,000. Okay, that seems about right. So not far from where we are now. And then it finishes the year in a worst case scenario. I think it's like 200, 250. In a base case scenario, it's kind of 350. And in a blow off top cycle like 2017, back end of the year, could go north of 500,000. It's difficult to know. So I always kind of give a probabilistic tree of, these are the kinds of zones.
Renowned macro investor and Real Vision CEO Raoul, renowned for his uncanny insights, has shared a perspective that could send ripples across the market. In this roller coaster ride, what does this mean for traders and investors alike? Echoing cautionary tones.
It's got the right side of the European crisis. It got, you kind of could see the world through that lens, and it worked very well. I missed the rise of technology earlier on. When I look forwards, the whole world that we understand it is driven by scarcity. And generally, as we've transitioned from manufacturing economies to service economies, scarcity of knowledge is the thing. That's why lawyers get paid so much money, and accountants and financial advisors and doctors and surgeons and all of this stuff, radiologists, is because there's a short number of people, large demand for the services. AI has just made that knowledge a zero. People don't get it yet, but it's all a zero. Being a content creator, creating a media company, a zero. Making films, the cost of making a film will go from $100 million to $5 million or $2 million. So that's the cost element. On the manufacturing side, we're bringing the robots in. So what is the expensive thing of a manufacturing? It's the people. Well, you're just going to get rid of them. Okay, so we're kind of laying off a lot of jobs. Everyone understands that about AI over time, but it's offset by an aging population. So there's less people in the labor force anyway. So that is not the bit that concerns me. The bit that concerns me is, what does it mean for your business or my business when we're replaced by AI? What does it mean for financial markets when we have artificial superintelligence, ASI? Well, as investors, we're replaced because somebody can do it better than us. Somebody can do everything better than all of us. So you start thinking, well, I'm not sure how financial markets even work. Do they just... Well, I don't know, because it's not going to be run by human emotion. It's going to be run by machine emotion or machine logic. Then we start thinking, well, the other thing about AI is right now we've been living this software is eating the world revolution that Mark Andreessen talked about many years ago, and the rise of SaaS software.
Raoul Pal cautioned his 1 million followers against the euphoria of fear of missing out, an emotion that has often been the downfall for many in the crypto realm. Unpacking his tweets, it's evident that Pal preaches self-restraint and strategic foresight. He advocates a methodical approach, suggesting that traders stick to a portfolio comprising just 3 to 5 key assets.
Beautiful new platform for whatever, financial advice. I can say, hey, I want to copy Jimmy's platform, but I want it for the Indian market, doing for their regulations, and it'll build it in less than a minute. So what moats do we have around our business? And what moats do we have around the fact that you and I got paid for knowledge? And that scales everywhere. So humans will find new ways of making a living. And I think the online communities is one way, because humans are social creatures by nature. So they want to be around other humans, they want to be talking to each other. But the world is going to fundamentally change in ways that we can't understand. We've never not been the top of the intellectual tree. But if you look at AI, it went last year from an IQ of 90 to a high IQ of 157. So we pretty much doubled. If we double in IQ, we get to 300 next year, which is more than any human ever recorded. And then the year after that, 600. Then the year after that, 12. I mean, this is la la land, right? So I kind of thought about this and thought, with the exponential change that's coming in all of this technology, even longevity increases for humanity as genetic sciences use this and nanotechnology, is that we don't understand what the world is. And so when I come into a process of massive change, it's going to create societal disruption, it's going to create enormous opportunity, but in ways we don't yet know.
Raoul Pal's referral to the Degen bag is a nod to those who, like gamblers, seek reward without calculating risk, with analysts observing that Bitcoin's dance with volatility is neither new nor singular.
Now, it's this 4-year cycle, something I call the everything code cycle, because in 2008, there was a debt jubilee of where they reset interest rates to 0. All of the governments, therefore, didn't have to pay interest for a while, so it was a break on interest. So it was like a debt jubilee. It's like, don't worry about it, guys. Don't pay your interest. Sort out your debts. They all restructured their debts into the 3 to 5 year sector, and so 4 years being in the middle of it, and it's created this perfect cycle that's been happening since 2008. What has happened this time around, because we had the pandemic inflation, it's been very late for them to cut rates. Normally, in this point in the cycle, they would have cut rates back down to trend rate of GDP growth, let's say 2%, but they couldn't. So what's happening is the debt is now compounding into new debt because they're issuing new debt to pay old debts. And so what you've got is a tsunami of debt that's happening, which is why they need to get interest rates down. So it's that dynamic that's causing it, is the issuance. Something will give at some point. Either the governments are going to have to stop it because everyone's got the same problem, and the UK interest rates just hit it was like a 30, 40-year high. You know, it's unsustainable in highly indebted economies. So they're all going to have to do something. Now, whether it's a yield curve control idea, which is they kind of, as opposed to forgiving all the debt payments, they say, we're going to cap interest rate on government debt at X%. or you have to do QE, but certainly what they're desperate for is to add liquidity into the system. There's a tightness of liquidity that stops people buying the bonds, which is why the excess issuance isn't being bought. The other issue is the dollar's too strong. So it's expensive for the Japanese and the Chinese and the Europeans to buy US government bonds. So again, it's another reason they've got to get the dollar lower, got to get the rates lower.
Bitcoin's current position, although seemingly precarious, is part of a larger storyline of maturation and potential. Predictions indicate that the right approach can yield generous returns. But what do you think? Share your thoughts, your strategies, and join this dynamic conversation. After all, in the world of cryptocurrency, the dialogue is as rich as the assets we invest in. Don't forget to like and subscribe, and let's keep this bull run going.